So when you're talking about this Viksit Bharat idea, the idea that you're in about 22 years from now, you're going to have a developed nation. Obviously, banks will form a core part of it because financing is the necessity. But if you can tell us a little bit more in detail as to what, say, State Bank of India and the broader banking system can and will do in these coming 20 odd years, what can we look forward to?
So I think you called it blueprint for Viksit Bharat, right? One of the critical elements for this blueprint to work is the capital. And today, much of the debt capital actually comes from the bank loans. Earlier also I mentioned that the nature of savings is undergoing a change. There is a shift in the depositor's behavior or the saver's behavior, that an asset allocation is being adopted across the segments of the savers. So if we really have to contribute to the capital which is required for our goals of $35 trillion economy by 2047, this capital may not come purely from the banking system. It has to come from where the savings are going to. Even today there is an immense need in terms of getting this capital, particularly debt capital from the mutual fund industry, insurance industry, pension funds. So there is a requirement of deepening the bond market. The bank loans alone will not be sufficient. If the savings are getting allocated, I think the debt capital also come from these segments. I think this is one point which going forward, we will have to see more depth in the market. While the banks continue to play an important role because the 35-36% household savings, what we have, one of the largest household savings in the world, they predominantly go to the banking sector currently. So that role will continue to be played, but I think significant contribution has to come from the other sectors also.
Do you see that changing, sir? The shift in saving patterns? Because the rate of deposit growth and difficulty in deposit growth, which a lot of financial institutions now face, do you see that as a change in pattern which has now begun and will only deepen? I'm wondering, as a veteran banker, how do you see it when maybe relatively more households want to invest, say, in a mutual fund and not put their money in an FD?
So that shift is kind of irreversible despite whatever is happening in the markets. I believe that as I mentioned, people would like to allocate their savings. It is just not that, you just put in your bank account and not do anything about it. It is not only in terms of it is going to the investments outside the banking system. Within the bank also we see that the ease of doing transaction has contributed to a significant term deposits. So if somebody had 50,000 rupees in the past, and if they had to make this 50,000 rupees into a fixed deposit, going to the branch, filling up the form, people didn't bother about actually moving that funds to fixed deposit. Now in 2 clicks, 3 clicks, you can shift and there's no click also required if you are actually putting the sweep. So which means that there will be a shift in terms of, I think we should be okay with as long as it is moving from savings to fixed deposit.
But it's there.
But if it is going out into the market, which is inevitable, I think that is what point which I'm making is, for Viksit Bharat, the capital has to come from domestic capital, from the banking system, and also the sectors where the savings are being acted upon. And also we need foreign capital to come in. I think that is also another thing what FDI, role of FDI in the development of infrastructure, other corporate, capex programs is extremely important.
I want to jump to the asset side of the story. Now, as the largest lender in the economy, obviously, you're a barometer for this entire ecosystem, right? One thing that seems to be a constant sort of question from the media and from people outside is when is the private sector going to actually start spending on this, on their growth, on their capex? I wanted to get your view. Are you seeing green shoots, or are we well past the green shoot stage? A, and B, what can you do more so that the private sector does feel more comfortable to come out and spend and thereby help the growth?
The private capital expenditure, from where I sit, I see that private capital expenditure is happening. Maybe, we are kind of an outlier because we are the largest player in the project financing. So obviously, whatever projects there in the market will come to us. So if you see our pipeline, I mentioned in my analyst meet also that we have both in terms of the capital expenditure by the public sector as well as private sector is almost about 2.5 lakh crores, which is a very good visibility. And I also mentioned that the sectors which are not actually spending is the core sectors like steel. And it's not about that they don't have the domestic consumption or demand, but I think everybody is watching what is the external sector is going to be. You did mention something about tariffs, right, to the Commerce Minister. But it's a fact that all of these core sectors are waiting, particularly steel is waiting, that how these tariffs, not in India, but in other countries, how is it going to play, whether it is going to lead to any dumping.
Yeah.
So this is something what everybody is watching. But otherwise, I see the sectors like, renewables continue to be doing well across the segments within the renewables. Roads are doing well and data centers are doing well. So if we measure the private capital expenditure only by way of steel, cement and these things, I think we need to wait for some more time for the dust to settle down in the West and then things become clearer.
Well put, sir. So in that sense, the big boost for the economy broadly for the last, I would say 2 years or so, has been a huge push in government expenditure and public expenditure. That the fear is, and when I say fear, I temper it with maybe what equity participants are seeing broadly, that is there going to be now slowdown in government capex? Because there is only that much that the central government can spend and actually go out and spend, even if you budget. What is the sort of trend that you would observe? Is that now a cycle which has bottomed out and will peak again?
No, the government is committed. I think FM during her visit, post-budget also made it very clear that the government, central government's commitment to the capital expenditure will continue to be there. And what we have seen is that we need to look at the capital expenditure from the government side, three components. One is the central government commitment, almost about 11.1 lakh crore for the capital expenditure. And the capital expenditure programs of the public sector entities, that is almost 4 lakh crores. Yeah. Our assessment, of course, FM mentioned something about maybe 1 lakh crore from the state governments, but we see that through the grants given by the central government, there is a capital programs about 4 lakh crores from the state governments, which add up to a significant number of 19 lakh crores. So I don't think central government or any of the governments, it is a fact that most of the state governments in the last 1 year, because of the elections and so many commitments, were not able to spend as much on the capital expenditure program. We are seeing that even the state governments are coming out with their capex programs, which means that the commitment towards capital expenditure is definitely there.
I want to touch upon, we've talked about private expenditure and government expenditure, but private consumption and thereby banks' role in providing that retail loan boost. Over the last 1 year or so, banks have, a little over a 1 year period, banks have slowed down that piece. One outcome of that is that people are not now spending as much as they used to spend 18 months ago even. To your mind, are we done with that period where that caution was warranted? And maybe now things are starting to look up a little bit on the retail consumption side.
No, on the retail personal side, the home loans are doing very well. I think the concern is mainly in terms of unsecured personal loans. I believe that it is bottomed out. From here, there would be growth in the unsecured personal loans. The degrowth or deceleration which has happened mainly several factors. Is not only about the regulatory action in terms of increasing the risk weights. It is also a fact that many of us looked at the individual leverage and we realized that the small value loans, particularly 50,000 to 1 lakh rupees for the new to credit customers, there's been a building up of the leverage. And that made many people to relook at their models of underwriting. And one of the important systemic development which I keep talking about is the frequency of bureau data refresh, which is now currently happening every 15 days. That means there is a greater visibility of the leverage at the individual and the family level. So obviously that will prevent multiple borrowings and eventual defaults on the new to credit segment.